So today let's talk about, could the Fed cause a stock market crash in 2024? And as well as that, we'll have some individual news on some companies that I own, like Airtel Africa, Sofi, Meta and Evolution. So I hope you enjoyed the video. Let's get started. So you might have seen in the stock market yesterday, it was a ugly day. The S&P was down 1.6%, and if you look at the Nasdaq, down nearly 2%. And for me, when I looked at my account yesterday, I got in around about 11 p.m. last night, and I looked and went, wow, what just happened? And then I thought, oh, the Fed are speaking. The Fed have done something, and the Fed basically said they're going to hold rates steady, and they indicate they are not ready to start cutting yet, which is not surprised. They want to see the inflation go a little bit lower than where it is right now. Now, the big problem, and we called this out the last time the Fed met, when they said they are actually going to do 3 cuts in 2024, is what the market did is it got too excited, it jumped on it straight away and thought, oh, by the time we get to the next meeting, we might start seeing the information about the cuts starting to happen. And straight away, the market started pricing in a cut at the start of the year. Now, if you guys remember, I talked to you guys and I said, there's no chance of that happening. We are probably not going to see a cut until probably July time, but the market is getting too excited, and that's probably why we've seen a big rally in the market so far this year, well, until we had that little bit of a pullback, and at the back end of last year, is the market is getting too excited for these rate cuts. And realistically, the Fed are not going to do them anytime soon. And even when you look at the latest data, when you look at March, the market has now priced in the rates to stay exactly the same, and that's what caused the drop in the share price, is that the market went, oh, the Fed aren't actually going to cut rates at the next meeting. And the market went, oh, well, we've got to start pricing that in. But really, the market shouldn't have been priced in a cut on the next one. It's absolutely crazy. Now, the market is actually now starting to price in a cut on the May meeting. I don't think we're going to see the cut at the May meeting. I think we're going to get the first cut probably around June or July time. So I think there's a little bit of a way to go yet. So what we saw yesterday is the market correcting to the news that the cut isn't going to come yet. And that's the market's fault. It got way too excited. It wasn't listening to what Jerome Powell was saying. And now that is starting to get priced in. Now, what the Fed will have to do is that they have said they are going to cut the rates 3 times this year. So as long as they cut the rates 3 times this year, I think we'll be okay. And I think the economy will do very well. The economy's held up very well, and we'll probably have a good stock market if that happens. Now, the only worry is with the Fed is that I hope they don't start leaving it too late in the year, because what is happening out there is inflation is coming down, and it is down rapidly. It is far below the Fed's 2% target. Now, the reason why it looks a lot higher on the government basis, it looks 3.4 at the moment, is because the Fed use a lot of lagging indicators, a lot of information that's very slow to show the inflation. So this worked when inflation was going up and up and up and up, and we saw the inflation go to 6-7%. True inflation was at 20+%, and the Fed was still going, oh, it'll sort itself out, don't worry, we're not going to put up interest rates yet. And then eventually when it went up to 10%, the Fed went, whoa, what happened here? We're going to have to start putting interest rates up. It was very slow to adapt to the higher inflation environment and put those interest rates up quicker, because it used lagging information. The lagging information wasn't showing the true impacts of inflation. And the same thing is happening right now, where the Fed's looking and going, inflation is still a little bit above our target. Realistically, it's not, because they're using a lot of lagging indicators, and as you can see from true inflation, just as when it was going up, it was a lot higher than what the Fed was saying, and it's now a lot lower. And the thing is with these interest rates is that the interest rates take a while to kick in. We have started to slowly see these higher interest rates that they've had at 5% starting to kick in. The economy starting to slow down. We're seeing spending starting to slow down. We are seeing the impacts of the higher interest rate environment and the adaptation to that, and eventually that will hurt consumers. When you've gone from 2% to 5% overnight, that's going to affect the economy massively, and it will take its toll on the economy as we adapt to these higher interest rates, which is still taking hold at the moment. So realistically, the Fed needs to be future thinking. It can't get to 2% and then go, oh, now we're going to cut rates, because that'll be too late. And then what situation will we be in there? What will the economy be in? That would be the worry. It has to be looking now and going, okay, realistically, these interest rates, if we start lowering them, aren't going to take effect for the next coming 6 months. In the 6 months' time, we will be below 2%. So the Fed has to act before it gets there. You can't get there and then act, because it's too late, and then you end in a situation where you could have the economy deteriorating, we have deflation start kicking in. That's not what we want. So the Fed needs to be future thinking. Now, if they don't do that, I do think we could have a situation where it could get a little bit ugly for the stock market and the economy. Now, looking at the Fed and what they have done previously is they've got most of the decisions right. I think they might have gone up a little bit later than what they should have done, but they just about got it right. And they are indicating they're going to do 3 cuts. And I think if they do 3 cuts this year, the stock market will be absolutely fine and the economy will be fine. But hopefully they do it at the right time and they don't leave it too late in the year before they start doing it. So at the moment, I think we're okay. I think we're just having a big correction on the market, getting way too future thinking we're going to get cuts in March, which was never going to happen. And even now, I don't think we'll get it in May. But I think we have to see the Fed start cutting by June, July time. If we don't, that's when I do start getting worried. So I'm not worried at the moment, but hopefully the Fed do make the right decision when we get there in about half a year's time. Airtel Africa having a pretty good day today. Stock is up. Looking out at the trading update, very, very good trading update. Revenue up by 20%. EBITDA was up 21%. Now, that is on constant currency. Now, the problem is, as most of you guys know, is Airtel Africa operates in Africa and Nigeria, and the currency devaluation has been massive. So even though these numbers look good, because they have to account for the currency decline, then it was only up by 1.4%, and EBITDA as well was a decline by 0.4%, which is really annoying to see the currency impacts, because without it, these numbers are absolutely fantastic. Now, at some point, the currency will stabilise in Airtel Africa and obviously Nigeria. That is, where the currency is based. And when they stop having to accounting for this decline, the growth of this company is going to go back to very good growth, as we've seen already, without the currency impact. And the profitability is going to ramp up really well. And if we do have a stable currency, we're going to be talking about 742 million profitability next year. I tell you, on a 4.2 billion market cap, it's going to look very good. So fantastic numbers from Airtel Africa once you take that currency impact out. And once we have the currency stabilised here, I'm really looking forward to where Airtel Africa goes in the next coming few years. And it's good to see the market as well actually recognise that and rewarded it today, to be fair. SoFi, oh my days, what is going on with SoFi? They bring out absolutely fantastic earnings, stock goes up, and now the stock is only up 1% since it brought out its earnings. So they've brought out triple beats, raised the guidance, given long-term guidance, absolutely amazing, stock's up 20%, and it's come all the way back. Crazy. Now, funny enough, I actually called this out on the Discord. I said this could potentially happen, and it has happened, and it happened exactly how I thought it would. Morgan Stanley came out and they said that the price target they have on it is going to go from $7 down to $6.50. How crazy is that? A company that's just brought out their mega earnings, they downgrade the stock on those earnings. It's absolutely wrong. There's no way that you bring out those financials that are so far ahead of market expectations and the guidance so far ahead of market expectations, and you downgrade the stock on that. But like I said, there's games going on with SoFi. I've not seen games played by Wall Street on a stock like this for quite a while. We're going back to 2022 when I saw these games being played on like a stock like SoFi. Obviously, the reason why Morgan Stanley are doing this is not because they actually believe that's the correct price target. SoFi are taking big market share from Morgan Stanley and the big banks. They don't like it, and the only way that they can get their revenge on them is by doing this sort of action to them and saying, hey, if you're taking market share, we've got the big money, we control your share price. And you can see these games going on by these big banks. You see these games going on with short reports. It's crazy. And I know that we're in 2024 and you think these things can't happen, but trust me, there's a lot of things that go on behind the scenes that are definitely not fair, and we're seeing them games played by Morgan Stanley at the moment. But you know what? If this is creating an opportunity into SoFi to buy some more shares, I might take it. But it's crazy to see some of these games being played still. Facebook, Meta, they're going to be reporting earnings tonight. Really interested to see what they are going to be doing. Look at Google earnings. I expect good numbers from Meta. EPS is going to go up massively from a year ago. Revenue massively up from a year ago as well. So let's see what Meta do. If it's something big, if there's a big reaction, I might make a video on it tomorrow. If not, I'll make a video on something else. But yeah, really looking forward to Meta earnings and looking at Google's. I've got a little bit of big expectations for them, and hopefully Mark Zuckerberg doesn't go on about the metaverse too much. That could be the only thing where it goes a little bit wrong. And the last stock, Evolution. So one of my new stocks into the portfolio, I actually have the dual listing, the US listing, so I'll probably see the bump up when the market opens today. But yeah, they're having a very good day today. The stock is up around about 6%, as you can see here. Brought out their earnings, very, very impressive earnings. Revenue for the full year up 23%, EBITDA up 25%. This company is just driving up the profitability, driving up the dividend as well. And when you look at the numbers that they're doing, and it's currently trading at 24 times earnings, collect that nice dividend, not too bad at all. Obviously, this is one of the kind of fresh blood, I'll say, into my portfolio. So hopefully this really does kick on. This is one of my new batch of my 2023 stocks coming in with like Fiverr, for example, and D-Local. These are my next batch of stocks, my new blood into the portfolio to hopefully drive us up to some good gains for the next few years. And that's how I like to, reflect on a lot of my stocks, is that, really good year for me. When you look at the stocks I was picking, Greg's, great performance, Hollywood Ball, great performance. All them stocks I was picking, especially on the UK side of it, really good performance, helped me to outperform the market that year. You look at 2021, because of those bad picks in 2021, led me to have a bad year in 2022 with the likes of, Skills, for example, and Beyond Meat. And then in 2022, when I brought the new blood in to the portfolio, that what helped me outperform the market that year in the next year in 2023 is because I got back my mojo, and I was picking quality companies again with Mercado Libre and DraftKings, for example, and we led to smash the market. So when I'm picking a lot of these new blood right now, like Evolution and Fiverr, this is probably the key drivers of what's going to help me outperform the market coming forward. And obviously, these are stocks that I'm really focused on right now. And when I look at Evolution, it's good to see this still bringing out financials that are very impressive and rewarded on the share price today, which is really good. So yeah, it looks like a lot of the new blood that's coming into the portfolio is doing what I want them to do, financially performing, and hopefully that can lead us on to having another good year in 2024, 2025. And realistically, I look at Evolution with those financials, and it's not too bad of a valuation still right now, which is pretty impressive anyway. So yeah, hope you enjoyed the little bit of a quick recap on what's going on with the market and the Fed, what's going on with Airtel Africa, what's going on with SoFi, what's coming up for Meta, and Evolution smashing earnings, which is absolutely amazing for a stock I own. So hope you enjoyed the video, guys. See you tomorrow.